Joining me now is another legend in the mining and metals sector, David Elliott, co-founder of Haywood Securities. He's built a career over multiple decades and has recently been inducted into the Canadian Mining Hall of Fame. David, it's an honor to have you on the show. Welcome to Kitco.
Well, thank you very much for having me.
I know you don't do media appearances very often, so this is it's an incredible honor to finally speak with you.
I'm a little shy, so anyway.
So David, we talked offline about your experiences, and we're going to talk about your process, your philosophy, and the factors to your success that have led to your success. But first, I'd like to get your outlook on the macroeconomic landscape. So the opportunities and risks that investors face today, and where you think they should be allocating their capital.
Well, I think just going back to government stimulus, I think that money, there's been a lot of money come in, and it's really masked the extent of the damage that COVID has done on a global basis. And a lot of that money, I think some of that money has even gone into the stock markets. It's COVID vaccine will take longer to roll out to the mass population. You've got variants coming in now of the virus, and they're showing up already, and they're in certain countries they're spreading quite quickly. And I think North America is going to be next if it's not here already. The valuations in the capital markets are high. Investors are willing to pay too much for future value, especially in riskier assets. So I think as a new investor coming in, I think they should be looking at sectors that have been overlooked. Companies that have good earnings and they have a growth profile, but they've just been overlooked because of all the technology and so forth. The digital media is becoming dangerously powerful at influencing investors. So investors are, they're following. It's like a big herd that follows different companies. And I think investors need to be aware that these companies are trading at valuations that are, you're 20, 30 years from now, right? Based on revenues, which is, that's not going to end well at some point.
I have a few questions about gold. And, gold has not performed very well over the last few months following its rise to all-time highs in August. There's a few theories. Here's my theory, and it leads back to your valuations about equities. And please, feel free to disagree with me if you think I'm wrong. I think that, stimulus, yes, should be good for gold, but it's also good for equities. And right now we're seeing a risk-on appetite. Investors are putting their capital into risk-on assets. There's less of a sort of risk-off sentiment right now. People aren't really going to people really aren't going to safe haven assets like gold. Is that what you're seeing right now?
Yeah, we are seeing a bit of that, but you've got to look. Gold has moved from 1250 to close to 2100 in a very short period of time. And so, and silver has had a good move. Copper came from $2 to 350, 355. Nickel's a little better. Tin prices are better. Cobalt is up. So the metals have had they've got to consolidate those gains, right? They just can't keep going to levels. And the stocks are very similar. I mean, you look at the big cap mining stocks who showed the leadership that we badly needed in the sector. They were up 50 to 175% from their 52-week lows, right? So they got to consolidate those gains, and I think that's what's happening now. We're consolidating the gains in the metal prices. We're consolidating gains in the stocks, and so you're going to go through a period of that consolidation. It can last 2, 3, 4 quarters, maybe. And then I think at that point in time, maybe we have a better visibility on COVID. The vaccines rolled out. We should look at have a better idea what kind of a recovery we're going to see globally, and I think if you can demonstrate that there's going to be some decent growth, then I think you're going to see the metal stocks and prices. I think you're going to see them continue on uptrend.
Continue on uptrend. Okay, so that was my That was my next question. But, one of the concerns that I've had, and I've spoken to some guests about this, is that, yes, we're consolidating, but remember back in 2014, 2015, it consolidated for 4 years, without going anywhere. Could that happen again?
Well, you know what? It can. I mean, it can do that. I think it depend on a lot. A lot will depend too on the dollar, the U.S. dollar. Just I think the U.S. dollar made its highs during the Trump administration. I think that myself personally, but consolidation can last longer, right? But I think it'll be the demand for metals, right? And so as long as you've got a good recovery happening, and there's been a good recovery in China, right? That might be slowing down a little bit, but I think they're forecasted to show still 8% GDP this year.
Mm-hmm.
I can't remember if it was with the IMF or somebody had recently come out and said that. So that's reasonable growth if they can meet those targets. They're a big consumer of metals, and if you can get the emerging markets and the rest of the economy starting to show some growth, it's going to create more of a demand for metals, and I think you don't have the growth.
Mm-hmm.
If you don't have the growth, then I can see it taking longer, right? Till you can get that global growth.
Okay, so just following up on that very quickly, David, why do you think the bullish factors for growth are stronger than the bearish factors right now for gold? You've named a few bullish factors already, right? You've named, weakening dollar, stimulus.
Yeah.
I can think of a few bearish factors for gold. For example, a continuation of the rise in equities, which is, like I said earlier, would just push people away from safe havens. It's possible that real interest rates might rise because inflation isn't going to come. So we might see a rise of the real interest rates, which might actually push down gold. Anyway, how would you evaluate all these factors against each other?
Well, you know what? Yeah, I mean, there's lots of different things you can pull out of a hat. I'm not sure. I think the U.S. dollar. If you had a rate started to go up, then I think you'd see a firming in the U.S. dollar. That wouldn't be very good for gold. I think you'd have a pause, and you'd definitely have a pause. And I think there's an expectation maybe that the dollar was going to go lower. Which it hasn't, right? It's kind of held in there. It's firmed up a little bit recently, but the 10-year, is around 1%. I mean, do you want to give your money to the government for 1% and hope you get paid back? It doesn't sound like a good strategy to me. So, I think there's plus and minuses with gold. I mean, I just think the long-term outlook, I kind of look more in the long term. I think the long-term outlook for gold, I think, is very good. And what it's going to do in the near term, it's very difficult to predict. But it has had a big run already recently. And so, it's got some work to do to consolidate those gains for sure.
And how do you feel? I mean, you talked about valuations of the broad equities markets. How do you feel about valuations of the miners specifically? Are they too high for you now?
I think they've probably corrected some. I think, but some of them had gone to, especially some of the royalty companies and some of the miners. They've had a pretty good run. I'd like to see another 2 to 4 quarters of production and earnings, and just see because they got some pretty good gold pricing the last 4 quarters. I'd like to see how that relates to different pricing. So they've had a big lift. So I think I would look for weakness in them, and if there's some weakness, that would be an opportunity to add to positions or enter them.
Yeah, let's talk about the mining sector today and the health of the sector. So put it this way. Now, you started working at Haywood. You bought the company in 1986. Let's rewind. Let's say if you were to rewind 35 years, if you were 35 years younger today, would you still start a business in the mining sector? given today's environment?
Yeah, that's a good question. I mean, I don't know whether I can give you an honest answer. It's been so cyclical over the years, and I've seen so many cycles that many a times my wife said to me, she said, "What are you doing? Are you sure this is what you want to do?" But I developed a passion for mining at a very young age,
Yeah.
and it just kind of, the search for metals, it just grasped me in my imagination, and I really I got entrenched in partnering with people that were partnering with good science. I was always about good science, and because I'm not technical myself, so I wanted to partner with good science, and I just the geologists I met over the years, and very intelligent people, nice people.
Mm-hmm.
I just developed this passion, and it just got bigger and bigger and bigger of the search for metals, and so I don't think turning the clock back. I don't. I think I probably
Mm-hmm.
I probably do the same thing. It's been a good career. It's had its ups and downs, of course, with the cycles that are inherent with the metals. But it's been. I've met a lot of nice people, worked with a lot of nice people, traveled to different countries, and met a lot of nice local people in areas that we were working in.
Yeah, over your career, this is something I've been wondering myself. Have you observed any technological advancements in the mining space? The oil had its fracking moment last decade.
Well, you know what? I don't think we've done as good a job as the oil industry. The oil industry, I think, has done a far better job at getting technology smarter and more efficient. We'd be able to reduce costs. I think it's starting to happen in the mining industry, and I think it has over the last 10 years or so, where they've developed, for instance, different geophysical surveys. They've developed new geophysical surveys that are more accurate and helpful with exploration. I think on the metallurgy side, there's been some improvements in metallurgical processes. So I think the mining industry is moving that way. Automation in the mining sector, I think you're seeing a lot more automation, especially in underground mining and in some cases open pit mining. I think so. That's that's starting to happen, and I think COVID really is going to push that even harder. The automation.
Yeah.
And offsite working.
Yeah, that's true.
Yeah.
Yeah, I wonder how you pick stocks, David. If I could pick your brain on your process there, you obviously had tremendous success. If I give you, let's take with a junior company. A lot of our viewers are retail investors themselves. They buy junior companies. Let's say I gave you a junior miner, and I gave you just their financial statements. What's the first thing you would look at?
Well, I'd look at. I guess on the financial statement, I would look at and see make sure that they have a reasonable corporate burn rate, right? That they keep the corporate burn rate down as low as they can, within reason. That there's no red flags in the balance sheet like.
So what do you mean by burn rate? So can you just elaborate? What's a burn rate there?
Well, that's our monthly. The monthly operational costs that will cost them to keep the doors open.
I see.
Lawyers, accountants, their own salaries, and so forth. So you want to see a clean balance sheet, right, with no red flags in it. You don't want to see accrued salaries, for instance, where they've been accruing salaries on their books to pay out at a future date. And we don't like to see that. And you wouldn't want to see any lawsuits or claim disputes that are noted in the balance sheet.
Yeah.
So, that's kind of it. I think from a management point of view, we'd like to see people with strong capital markets experience, a strong technical team, a discovery track record, or they've been on a discovery team with a group of people in the past. and a good social team in place, or in-house is better, but a good social consultant is okay as well. And the management need to be. We like to see with committed invested capital. So they've got to have skin in the game and own a decent position in the company, and they've got to be driven individuals to want to succeed, right? It can't be just a job for them, right?
Does it matter to you if the management team has a more technical or a financial background? If they came from, let's say, a buy side, or they came from being a geologist, does that make a difference?
Yeah. Well, it does to me, because I like backing good science.
Okay.
But you have to marry that with some strong finance and capital markets experience. So that's kind of the best scenario. You have some finance and capital markets experience, and then you've got the good science. So then I think it makes a good combination.
Are there jurisdictions that you prefer when picking stocks?
Jurisdictions is important. I mean, investing in mining globally now is shrunk down to where investors, would want to take their money based on country risk. And I think Australia, Western, Southern Australia, Canada, U.S., Finland, Sweden are all good jurisdictions. There's a few countries in Africa. Namibia, I like. A good jurisdiction, and then South America. There's some good jurisdictions, but they in South America they come with their challenges, but there's still from a geological point of view, there's good potential there.
David, any final advice to investors, especially the young investors watching our show right now? Let's say if you would rewind 30, 40 years and do everything all over again, would you do the same things? Would you avoid some of the mistakes you've made? What are the lessons you've learned that you'd like to tell the audience?
I think I probably would end up in the same path that I found myself in. Mistakes you make, I think, if you back good management and good science, that helps manage the risk, because it's so risky, this mineral exploration and development. And so I think mistakes I've made over the years, sometimes you get involved with a management team that maybe you don't know real well, but on the surface they look fine, but once once you're partnered with them for a period of time, you find out some things that you didn't maybe peel the onion back far enough initially when you were looking at the management, right? Sure. And you find out some things that maybe I don't like the way they're doing that, or I don't, and so that's when I've probably made mistakes, right? Is not being careful enough with who you're partnering over time, but and it hasn't happened a lot, but and then the other area is just making a passive investment, where you get talked into making a passive investment. You don't have any influence or control over the management, and so a passive investment, they go wrong, right? Mm-hmm. Sometimes, right? Because you just don't have the anyway. Yeah. So I think that's for mistakes. I think that's. And sometimes mistakes just happen, right? You can have really good science, good management. You can be working in a country that is fine at the moment. Then all of a sudden they change their mining policies and they change, you just get blindsided, right? And things go wrong, right?
Yeah.
Not intentionally, but it's nothing you have control over, right?
Okay. Well, David, I think I could speak to you for hours about your experiences. So I'm happy to host you anytime you'd like to come back and tell us more. I think you could literally talk for hours. So thank you again for being so generous with your time today. I look forward to speaking with you again sometime.
Well, thanks very much, David. I appreciate you having me on. I'm very humbled. Thanks very much.
And thank you for watching Kitco News. I'm David Lynn.